Welcome to the weekly update. This is being prepared Sunday, May 15th, where we'll look at the action in the market of the past week and then see how things look for May 16th through May 20th. Going back over this week's session, just to kind of recap things, we saw continued selling as well as volatility due to growth concerns, and we have a real negative technical analysis picture. On the daily charts, we are pretty much negative. We're still looking negative on the weekly charts, but something happened this past week which may be positive. The S&P fell almost down to bear market territory, which is 20% from the all-time high. Right when it got to that level, we saw some real buying come in, and that happened late in the day on Thursday. We saw a real nice bounce on Friday. The question now is, can that continue and feed into the daily charts, which eventually will feed into the weekly charts? The markets are very concerned still that the Fed will remain really aggressive with their tightening plans because inflation data still is pretty high. The current plan that the Fed has is to raise interest rates 0.5% at the next two meetings, so 1 full percentage point from where they're at right now. And also to begin a tapering program. All the things that they did for quantitative easing, they're going to start doing quantitative tapering. The idea that inflation has topped has been revived. A week ago, there were a lot of people talking about maybe inflation is at the top and it's going to start coming down. Well, then we had some economic reports that went against that, and we saw a pretty negative week. We had the CPI and the PPI come out, and they're still very high, but they're coming down a little bit from where they had been. And so there's this idea that maybe inflation is starting to subside. We don't really know that for sure, but at least that's one scenario that the market is using to justify prices going higher. On the geopolitical front, Russia has threatened retaliation if Finland goes ahead and joins NATO. They don't like that idea very much. If that ends up happening, which has been in talks for quite a while now, that could escalate things potentially. There have been a lot of lockdowns in China. There are reports that say that things might be looking better in Shanghai, but there's still some concern about other areas in China, so it may require some pretty aggressive lockdowns. Oil, which has been kind of interesting because in the Middle East, they're selling oil to China, and China's saying like, okay, we don't really need all this extra oil. We're locked down in our biggest city. And that started to really lower oil prices. Well, with the lessening of the lockdowns, what they did is they cut oil prices due to weaker demand in Asia. But then, as these other reports are coming out that China might be stopping their lockdowns, that has seen oil prices really go back up. But overall, the forecasts have been lowered in the demand for oil. The S&P did fall below 4,000 and nearly entered bear market territory. That's what I was talking about earlier. But it was regained in Friday's session and was used as an entry point for buying. And I kind of explained that. It really started on Thursday late in the day and then followed through into Friday. Still being down 2.41% for the week. Volume was still above average, except the advance that we saw on Friday saw below average volume. So that's a little bit of a concern. What we're looking at right now, the technicals are still pretty negative overall and showing some oversold indications. Inflation and interest rates are the real focus for the markets right now. Of course, this whole backdrop of the different geopolitical concerns, China, and then the supply chain issues. We want to keep an eye on oil. Different Fed folks come out and make some statements, and sometimes that's seen as positive, other times as negative. And then earnings are coming out. And again, it just depends on what happens for each individual earnings report, whether it's positive or negative. Our trend is strengthening and it's negative on the weekly charts. Let's go back and look over the week. Getting back to Monday, where we did gap lower and we saw a pretty weak day where we closed just about at the low. We tried to gap higher on Tuesday, but then quickly saw selling come in and we got back above the daily pivot, but then really trailed off at the end. On Wednesday, things were chopping a little bit higher to sideways. We saw some real selling come in, They tried to recover from that, and then we ended up closing right at the low. This is where things possibly have changed. For Thursday, we did try to get back up to the daily pivot, even though we had a negative open, and we saw a lot of selling as the day went on. Right near the close, we formed a little bit of a base here. This was just about at bear market territory. We saw some buying come into the market, and then that was followed through on Friday. And we ended up recouping a lot of the losses. For the week, and this just goes back 5 days, so this will look a little bit different than some other charts. The Nasdaq 100 was up 1.64%, followed by the Nasdaq at a little over 1.5%. The mid caps were up 1.41%, the NYSE 1.3%, the small caps up 1.27%. The S&P itself was up 0.82%, and the Dow was actually down a little bit. The reason why these are different is a lot of calculations are based from the previous Friday, where this just counts Monday through Friday. Here's a chart that's probably more of what you're used to seeing, where the Dow was down 0.2%, Nasdaq 1.5%, the S&P down 0.2%, and the small caps were down 1.3%. As far as our sectors, pretty much across the board on a weekly basis, we saw negativity in the sectors, with discretionary leading the way lower, followed by the financials, tech, energy, which had been doing quite well. And then the one that actually eked out a bit of a gain were staples, which have been doing fairly well in this more defense environment that we've been in. And here's a look at just the past 5 trading days, with energy doing quite well. And at the end, financials ended up having kind of a bad week. Current market valuation. Right now, they suggest that the market is fairly valued. So let's look at the charts. The yield curve is coming down because they use the yield curve of the 10 to the 3 month. And that never did go inverted. On a valuation basis, when you use a thing called the Buffett indicator, which compares stock prices with GDP, we are still overvalued, but coming off an extreme positive reading. The PE ratio, same thing. It had been extreme, but it's coming down. However, since it's yellow, it's still overvalued. Interest rates, which remain historically low, even though they've been going up, they're more fairly valued right now. Margin debt was updated at the end of April, and it's really trailing off right now. And then the mean reversion, after getting far away from the mean price, we're coming back down closer to that price, but we're still far away, so we're overvalued. Sentiment, after Friday, we are at 12, and that is extreme fear. It was even lower than that after Thursday, but it's still showing an extreme reading. So we might be seeing some kind of critical mass where people are just completely negative about everything, and sometimes you can see a bounce from that. Here's the historical chart to show you where things have been recently. The Ridex bear bull ratio just shows that more people are still getting into the bearish mutual funds than the bullish mutual funds, although it did decline since the previous reading. The survey that comes out every week of AAII, which are individual investors, it did show some improvement this past week, but is still extreme negative. We tend to use this as a contrary indicator. So since they're extremely negative, we're looking at potentially being bullish or positive. One report that came out on Friday shows that there still is a decrease in consumer sentiment, how people are feeling about things. Meanwhile, interest rates, the 2-year Treasury yield, they continue to go higher. You can have the two coexist. We can see people feeling better at times and have interest rates going up at the same time, but we're not in a real growth environment right now as far as the economy. So we're seeing interest rates spiking, people not feeling very good, and at some point, something will have to give. People will either have to become more happy somehow, or we might see a decline in interest rates as these two come more in line with each other. But this can go on for quite a while. The VIX declined on a weekly basis, looking at the closing line value, and the bar also, we ended up closing right at the low of the weekly bar. The Ulcer Index is bouncing up slightly, which shows that there's a bit of an increase in fear in the market. The Chicago Financial Conditions Index, it was updated. We are going up as far as the concern, but we're still below the dark line. It's when it goes above this black line when we really start to be concerned about things. Same thing here with the spread between risky loans and not as risky loans. The concern is going up, but it's not spiking as it has done in other times. We have the weekly report coming out from active asset managers, and it just shows that they are extremely bearish. I tried to put some information on here. It came out May 11th, and the reading is 24.31, and we haven't seen a reading that low on this chart. Down below is the S&P 500. We can often use this as a contrary indicator. Even though these folks really know what they're doing, they're in charge of lots and lots of assets, they're human beings too, and they have a tendency to overreact either to the upside or to the downside. Right now, they're overreacting to the downside. FedWatch, just to quickly go over this, there's a 95.5% chance that we will be at 1.25 to 1.5 after June 15th's meeting. Here's the historical chart. If you want to pause the video and look this over, it's kind of a rainbow mess here. Then looking out at the July 27th meeting, there is an 86.7% chance right now that we'll be at 1.75 to 2% after that meeting. And here's the corresponding historical chart. The Fed balance sheet looks like it's starting to top out because they're beginning their tapering plans. And as those plans are executed, you should start to see this line go down, just like we did back in 2018. Looking at breadth on a weekly basis, it advanced when we look at the advanced declines ratio, and then looking at advanced declining volume, it also improved, but still both of these are negative. They're below the moving average. The advanced decline ratio did show some improvement, but we're still below zero. New highs and new lows, also looking at some improvement, but we're still negative overall when we go back 4 weeks. When we go back 10 weeks, we are still declining. Accumulation distribution showed some improvement, but we're still below the moving average. Our trend shows that it is strengthening, and the red line is on top and advancing. The green line is on the bottom and declining. So this suggests that we are still in a negative trend. That is a strong trend and getting stronger. The Arun kind of showing the same thing. The red line is pegged all the way near the top. The green line has been declining. When you compare those, we have an oscillator on the bottom, which is negative and declined. This past week, the mass index, after jumping above 27, it never came back down to 26.5. It's actually turning up again. This won't be an official signal until this line comes back down to the dotted red line. Long-term charts, looking either neutral to down pretty much overall when it comes to the decision point scorecard. The pivots, we dropped below the pivot on this chart, but we were able to get slightly back above it by the end of the week. Looking at the 50-period simple moving average, we are well below that moving average. Long-term trend shows that we had a recent death cross, and we are declining overall in price. Even though this bar looks a lot better, we were much lower earlier in the week, only to close near the high of the bar. Could there be some kind of a bounce on a daily basis that started on Thursday, carried through into Friday? Will it carry through into the coming week? Bullish percent index went extreme negative and then bounced back above on Friday, so we closed just slightly out of giving an oversold reading. Chaikin oscillator, also extreme negative but starting to turn up. Chaikin money flow, still negative but showing a little bit of improvement. Force index also negative and still declining. McClellan oscillator showing some improvement, but we're still below zero. Summation index declining based on price, declining based on volume. All of our oscillators are pretty much pegged severe negative right now. The PMO study, where the PMO was also on the previous chart, it's getting extreme, but we saw a decline based on price as well as volume. Inside the S&P, looking at PMO studies, we're bouncing after going extreme negative as far as those PMOs that are rising. We are extreme negative with the number of buy signals, and we are declining with those PMOs that are above zero. Relative strength index is not extreme negative, but is declining. Special K, rolling over a bit, but is still above the moving average. STO, declining based on price, declining based on volume. RSI, pegged negative. Williams percent R, after being pegged negative, is trying to bounce. Vortex, negative. The red line is on top and advancing. The green line is on the bottom and declining. Ultimate Oscillator, bounced just a little bit. It might be kind of hard to see, but we're still pretty negative overall. The Money Flow Index was flat to slightly higher in the past week, but still negative overall. We're below 50. The percent B indicator that we use to analyze Bollinger Bands shows that we are still negative overall and declining. The KST has been negative for quite a while now, but this is one of those indicators where if you had paid attention to it, you would have missed the whole run-up in 2021. PPO, Percentage Price Oscillator, continues to be in a negative trend. Rate of change based on 1 week shows that we are declining since we had a down week. Rate of change going back 50 weeks shows that we're below this dash line, and that is negative. Copic curve, we're waiting to see if this will turn up. We're also waiting for this on the daily chart, and it hasn't turned up yet. I started including this chart in the daily updates. This just goes back to a Fibonacci retracement of the S&P 500 going all the way back to the COVID low, all the way up to the high that was set in early 2022, and then we're getting down close to the 38.2 retracement level. We got kind of close to that before we bounced back up. So longer term, we probably want to keep an eye on this. Different charts, Heiken Ashi is still negative. The Kegi is still negative. The Renko is still negative. Point and Figure added some more zeros this past week, and it's coming off of a double bottom breakdown. 3-line break is also negative. Different trading systems. We're negative with the older Impulse system, with the S&P, and the parabolic SAR system is negative because the dots are on top. Looking at some of the broad market indexes, we have the S&P on the top, mid caps in the middle, and then small caps below, just to give you a visual representation of what's happening in the other indexes. All stocks, which includes not only US stocks and world stocks, shows that we are in a decided downtrend. Mid caps also in a downtrend. You're going to hear a lot of repetition here. Small caps looking very similar. The Dow holding up a bit better, but also not looking all that healthy. Nasdaq, same story there. Nasdaq 100, seeing a lot of across the board familiar chart patterns here. NYSE and the Wilshire. FANG stocks, they were really down big time, but were able to pare their losses and close near the upper part of the weekly bar. Same thing with ARK. It was down pretty heavy, only to bounce back on Friday and ended up being down 4.45% for the week. The biggest software companies, this could look encouraging. We set a real low earlier in the week only to come back and finish pretty much where things started. Broad market, CRB, is still in an overall uptrend even though it was down slightly on the week. Gold, this is a little bit concerning too. It dropped below its 200-day moving average on the daily chart and below the 50-week moving average on this chart. Silver, kind of the same thing. They're just kind of bouncing around all over the place here. Oil, after seeing some recent weakness, was able to close at 110.49 on the week. The dollar, which has still been doing quite well these days, it ended up closing at 104.62. Looking at some relative studies, bonds continue to really underperform stocks, but we're seeing a bit of a turn up now. We'll see, can we break above this declining moving average? Looking on a monthly basis, stocks still continue to outperform bonds, even though it's weakening slightly. Intermarket analysis chart shows how oil has been doing quite well. Gold is now dropped to negative, going back to the beginning of the year. The dollar has been holding up quite well. The S&P is trying to see if it can recover a little bit, whereas bond prices have really been trailing off. The gold to dollar ratio shows that gold has really been underperforming the dollar. Gold's been kind of chopping around where the dollar's been pretty strong lately. Gold to the S&P is also still positive, but showing some weakness currently. Low volatility stocks against the SPY shows that if you had gotten into more low volatile stocks, yeah, you would be down, but you wouldn't be down as much as if you were in the entire SPY. And that's why we see it outperforming here. It's going down less. Growth against value shows how growth has really been suffering. Against value, the Nasdaq 100 has really been underperforming the S&P 500. The S&P 100 has been underperforming the S&P 500. Discretionary has been underperforming staples. And energy has really been outperforming tech. Tech has been really weak. Energy has been doing quite well for 2022. So what's our outlook then for the upcoming week? On Tuesday, we have retail sales as well as industrial production and capacity utilization coming out. On Wednesday, housing starts and building permits. And then on Thursday, we have existing home sales. Some of the things that we'll watch are the technicals, and they're pretty negative right now, but we're oversold on the daily charts. We were after Thursday. We saw the bounce on Friday. We're going to be seeing, can we continue to get some strength from here? The big fixation are inflation and interest rates for the markets. Of course, all these different geopolitical concerns, Russia, Ukraine, China, all the things that are going on, and anything else that may creep up that we're not really aware of. Oil, we want to keep an eye on that. Different comments that people on the Fed make, earnings as they come out, and then we're watching a decades-long phenomenon in Japan right now that may lead to some problems in the future, not only for Japan, but may come over into the U.S., where they may have to not only sell their own bonds, they're the second biggest owner in treasuries after the Fed. They own even more than China. And if they have to start selling those bonds, what's that going to do? That'll drive prices down, which has already been happening, and potentially drive interest rates up. So our different scenarios, we're still down overall. So we're going with the down scenario. What's causing this? Rising interest rates and inflation fears. But over the last week, we saw interest rates and stocks pretty much move in the same direction. If interest rates were down, stocks were down. If interest rates were up, stocks were up. But that's not been the normal case lately. We'll have to see if that relationship gets more in line with each other. And we're also dealing with earnings and different Fed comments that I talked about. The technicals are negative, and we're not necessarily oversold. We are showing some oversold indications, but we're looking pretty negative overall. What can be the up scenario? We have these positive scenarios, and if you're interested in those, I tend to cover them in the daily videos a lot more, but they're not really happening right now because we're waiting to see if these things set up. There's 4 or 5 different things that we're watching, but they're not setting up currently. The technicals, we may be oversold on a daily basis. Can that help the weekly charts as well? Sideways, we're not in a sideways pattern because we're above 20 right now and we're in a negative trend. So thank you very much. I hope you have a wonderful week, and I'll prepare the next video after next week's sessions.